Welcome back. You are watching Global Lens. The European Union, South Korea and India are the large trading partners with the United States who are yet to strike a deal. The EU is facing 30% tariffs from August. India is facing a 26% tariff rate and South Korea is facing 25%. The European Union is now planning retaliatory measures to counter US's steep tariffs on the bloc. It is combining two packages of retaliatory measures into a single one that would target 93 billion euros of US imports into the European Union. This would include bourbon, airplanes and soybean. The combined list is likely to come into force on August 7th. This move comes as negotiations between the two nations have faltered in recent weeks. Joining me now to discuss this further is Abraham Newman, professor at the School of Foreign Service and in the Department of Government at Georgetown University. He's also the author of an article in Foreign Affairs magazine titled "Europe Must Unlock Its Geoeconomic Power. The European Union Needs a New Strategy to Defend Against Coercion." Mr. Newman, thank you very much for joining us on the program. Let me begin by asking you, what is the likelihood of a trade agreement between the European Union and the United States in light of the EU proposed retaliatory tariffs? Does a trade deal look absolutely unlikely now?
No, I don't think so at all. I think the threat by the European Union is really, it's a negotiating tactic. As we've seen in the case of Japan, with the Philippines, the United States wants to lower the maximum threat that it's imposing. And so they're just trying to reach a point where they can both agree. And it's really, I think it's very important for the European Union to stand up for itself and say, look, you're raising the cost of doing business and we're not going to accept that. And so hopefully through that process, both parties will climb down the escalatory ladder.
Right. I'd like to ask you what Europe and EU is trying to do right now is impose an anti-coercion instrument. What's the precedent as far as this instrument is concerned? And would it be the strongest retaliation ever by the European Union?
So this instrument is new. It was created just in the last few years, really in response to coercion from China, or the threat of coercion from China. And what it does is that it allows the European Union to not just use tariffs, but also other market access measures to resist coercion threats. It would be unprecedented for the European Union to do it. For really the European Union's DNA is about openness. It's not about closure. And so, to use this, what they call often the bazooka, would be quite unique. I think we're not going to get there, so I'm reluctant to speculate that it'll actually be used, but it would be quite dramatic if they turn to it.
Right. Do you think the way things are going, Europe will go ahead and impose this massive anti-coercion instrument on the United States?
Well, I think what we're seeing actually is that Europe is probably going to go a different direction, which is they're going to take the advantage that the United States is leaving open to them. So if you see what Europe's strategy right now is, it's about courting openness with other countries. That includes India, the countries that are part of Mercosur, Indonesia. Europe is basically seeing that the US is stepping away from the global economy and Europe sees an opportunity. And so I think when we're thinking about Europe's strategy, it's more important to think of their offense rather than these kinds of defensive retaliatory measures.
Right. How do you think this trade war between US and Europe is going to hurt the United States, considering that while Europe has a surplus in goods in trade with the United States, US had a surplus in services?
Yes, I mean, I don't think that there's really a beneficial story to this set of policies that the U.S. is pursuing. It really just, increases the cost of doing business for the U.S. and for the world. I think what we're seeing is the U.S. saying, look, we supported the global trading regime for decades, and we're not interested in doing that at the same level. And I think every other country, whether that's India, Japan, the European Union, instead of kind of begging for a better deal, just has to recognize that for now, the U.S. doesn't want to play like it used to. And so I think it's better for Europe, Japan, Indonesia, India to really pursue openness for themselves with other players that are still willing to engage in the kind of the more traditional trade alliances.
Right. Now, you've written about the kind of geoeconomic strategy that European Union really needs for the future. What are some of the steps that you expect the EU and EU leaders, individual countries to take in order to protect themselves in global trade, diversify? Because currently, the US, with $1.97 trillion in trade in 2024, these were the largest trading partners in the world. They'll have to diversify now. What are the strategies available?
Yes, I mean, Europe is, as we say in this paper, it's an economic superpower. What it really lacks is the tools, the governance, the institutions to use that. The anti-coercion instrument is a first step, but in many places, they just don't have the expertise and the institutions in order to manage this type of conflict. It's not really what they were set up to deal with. They, as I said, the European Union structure was set up to deal with a world of free trade. And so what they really need are strategic institutions around sanctions, export controls, tariff management that will let them do that. And I think we're already seeing them engage in those types of reforms, building up an economic institutional infrastructure that can then let them leverage their market power.
Right. You know, as we speak, India and UK are close to signing a trade deal. In fact, the Indian Prime Minister will be signing the trade deal tomorrow with the UK Prime Minister Keir Starmer. And this will now be a template for the India-EU negotiations, which have been taking place. And we hope to conclude this FTA by the year end. Do you think what's happening with the United States and EU's own diversification strategy will possibly speed up the process of negotiations and concluding a trade deal with India? How important will India be for the European Union now?
I mean, it's no doubt. India wins from this situation because right now the European Union is facing pressure both from the United States and from China. And it is in a position where it wants to quickly sign a whole host of trade agreements with countries that want to move forward. And so I think it is going to be easier for India and the European Union to strike a deal, one that maybe is not so focused on previous concerns that held up the deal, like agriculture. And so I think you're going to see Europe open to a more kind of flexible approach and one that will try to speed up these types of agreements. It's not a done deal. We've seen that with the Mercosur agreement. The French have continued to raise issues with that. So it's not that it's, will be easy, an easy process, but I definitely think that it will, what the US is doing will speed up those negotiations.
Right. Within Europe, which are the economies where you expect the highest impact of Trump's tariffs?
Well, what I think we're going to really see is what happens in the deal around autos. The German economy is a huge part of the European economy, and the auto supply chains that weave Europe and the United States together are dense and are really important for both economies. And so that will be the sticking point. What we saw in the Japan agreement was that the tariffs on autos were reduced just to a blanket tariff. If that happens, I think Europe will be able to absorb it. It won't be a big issue. But if you continue to have an excess tariff on autos, that could really hurt Germany in particular and Europe in general.
Right. But do you also feel that Trump's tariff strategy is now seeing diminishing returns? He won't be able to continue with these threats for long enough. It seems that European Union has also had enough and things are at a tipping point now. Do you feel after the 1st of August, things will start toning down a bit as far as trade tensions go?
Well, I think what we're seeing is that the world is rebalancing to a higher level of tariffs around the United States. So yes, the threats, the highest level threats are not sustainable. So, 46% against certain countries or, but what we have seen is an acceptance by other countries to really historic level of tariffs. If you think about the UK, the agreement between the US and the UK allows for 10% tariffs. The recent agreement with Japan, 15% tariffs. The news reporting that I've read, Europe is willing to accept 10% tariffs. So I don't think we're going to have an escalatory trade war that leads to a breakdown in the transatlantic trade flows. But I do think we will see a U.S. that is imposing costs on its trade partners, and that its trade partners ultimately are willing to accept that. And that's why I think really the key strategy for these trade partners is to engage in more liberalization with each other. That's I think the offensive strategy of finding new markets when the U.S. is closing its market is really the best way for the global economy to move forward.
And Abraham, do economists like you believe that the current set of tariffs that the U.S. has imposed will stay even after Donald Trump leaves office?
That's a great question. I mean, I think what we've seen in the United States is that there's not a clear a coalition in support of free trade. If you look at President Biden's track record, he did not negotiate any free trade agreements. He did not remove the tariffs that were in place on China that the first Trump administration imposed. It will depend kind of where we land in terms of the final trade tariff levels, but it is quite difficult right now in our political environment to remove tariffs. And so I think if we get at really destructive levels, yes, the next administration would. But if it's, these 10% tariff levels, it will be quite tricky once they're in place to get them unwound.
All right. Thank you, Abraham, for joining us on the program. Clearly, we're looking at a volatile situation between US and European Union, and let's hope they come to some sort of agreement and understanding. That's a wrap on this edition of Global.